Yo, guys, back for another session. It's Saturday the 29th, meaning the trading week for Forex and S&P trader is over. Of course, you can go and sneak a little bit now into cryptos, but most of the time I keep my weekends for myself and keep it to develop and rest out a bit. What we will do in this session is a quick review of the two trades that I have taken this week. Not many trades taken. Thursday and Friday I was not able to sit behind the charts. So the only days that were able to trade for me were Monday, Tuesday, and Wednesday. On Monday evening, the weekly outlook was sent out, and in that outlook I mentioned very briefly that I would like to see a retest of a certain zone. If you have not watched that session, you can still watch it. Maybe you will get a nugget out of it. But I wanted it to see a retest of a certain zone on the S&P in the PM session for trading higher. But it went away with a breakaway gap, so I couldn't get an entry right there. On Tuesday I managed to get into one position, and on Wednesday I got into another one, both on the S&P. The system that I'm using to track my trades and to journal my trades is Notion. We will go over Notion later time on this channel, but very briefly, Notion is an documentation software application that you can use. It's a free application, and it's a way you can build your own workspace, so you can use it for several things. I use it personally for my trading environment, so for my trading office. Over there I got my backtesting ground, so things that I'm testing out and things that I'm looking at and things that I try to develop within my trading plan. My trading plan is written out into Notion. As I said, my trading journal is here. I do my forecasts here, my weekly outlooks, my daily outlooks, etc., etc. But I also manage my documentation of the knowledge that I learn along the way in different topics. So, for example, I'm a big fan of psychology, and I like to study into psychology. So the things that I learn about psychology are also documented here, and also my weekly register, so my calendar and the things that I am aiming at, my goal planning, etc. It's all here, so you can see it as my administration tool for a wider topic than only trading, but that is not the topic of today. So let's dive into the journal. For my journal, I'm still progressing and developing it bit by bit. I think as a trader, you're never at a stage that you can say, all right, I'm done developing, because trading is a always adapting and changing market, a changing environment, and a changing business. So that means if we want to stay ahead of the competitors that are around us, it means that we need to be able to adapt as well, and that it's not only within the charts but also within our life. How you do one thing is how you do everything is a phrase that is often said, but it is very true. So let's look at the first day, or the first journal that is visible here. It's a trade of S&P. What you can see, the things that I track for this particular trade, I'm trading at the moment at a small live account, because I want to test a few things out within my trading plan before going for a funded account again. I've done a few funded accounts over the last year. To be fair, haven't proceeded in one as of yet, because I've got into profit and then failed it, or failed it right away. So I'm trying to do a step back, testing out some stuff, working on a small account, and when I see my progress going on here, I will get back to my funded account and go for a challenge again, and hopefully process it and keep it, because that is the main part that you have to get to. It's not only achieving it, but keeping it after you achieve it, and that is done by proper risk management and emotional management, and of course, step one, a clear defined edge. So what we can see here, the things that I journal for myself, I journal always the date that the trade was on which account it was, what the result was, the amount of risk that I took is in percent, the P&L, so how much did I win or how much did I lose. So for this case I didn't lose a whole 2% because I minimized it and became minus 0.8, meaning it's a minus 0.4 R. The side I'm on, am I long or am I short? Am I buying or selling? The positions that I took, because sometimes I stack into the position. So for example, I buy for a smart money reversal, but I can see also a low risk buy that is closely correlated within the same setup, the same trade. I can add a position there as well, and when I see another order block forming over there, I can stack on it again. And of course that is always done with proper risk management by minimizing risk before entering again. The type of trade that I took, is it a day trade, a swing, an intra-session, an intraday, or a day trade? The particular trade here was a day trade because I was expecting to trade the weekly range or the daily range, at least for the coming day. Is the execution process or outcome based? Of course, want to aim at being process based, executions only, and the type of emotions that are countered with the trade. So as you can see, emotionally wise, I was pretty okay in this trade, even though it was a loss, and that can be correlated back to the technical game. Was it a B or C game technical wise trade? For me, I say this was a B, and the market exit was a stop loss. How much was the stop loss? How much was the take profit, etc., etc., etc. And here you can see the balance. As I said, it's a small account, so the loss was also pretty small in here. The thing is with journaling, if you're not journaling consistently the trades that you're taking, it's hard to progress and get any better because you're not familiar with the mistakes that you're making over and over again, and you have to keep seeing what you're doing wrong to get to the right side, because otherwise you will be doing it wrong unconsciously. But the first step is becoming consciously of what you're doing wrong before you can progress to become doing it better and doing it well. So what we can see here, let's go over the trades, or over the trade before. This is what I shared in the weekly outlook as well. We were trading from this weekly for value, from this 1 hour for value gap. We're trading higher, taking out this market structure shift, taking out this high, retraced, and then we pushed higher. So on the outlook I said right here I wanted this to see a little dive deeper and then break this high. What we did was we went higher, but we didn't break the high. We left equal highs here and traded back down to the 1 hour order block mean threshold. At the moment, what I was thinking when we came back is that we would still take this buy side liquidity. When I look back at this trade, considering the conditions that we were facing with a weekly fair value gap here below, and we were taking out previous week low, and instead of pushing directly after a retracement higher, coming back into the range is not high probability. We are already in a consolidating market, pushing lower, taking out buy side while not taking out the major swing high over here. When we are not keeping the momentum to the upside, it is indicating that it might want to retrace deeper and take out sell side liquidity. What I saw, we came back into the 15 minutes fair value gap and the 5 minute fair value gap that will be shown later on. I thought this was our structure low. I had this as my structure high. So within there we can see what is the structure that happened. We had a retest here and from there on a push higher. So I thought after taking out this sell side, and this retracement with multiple levels of buy side and sell side liquidity, we have buy side, we have sell side, we have buy side, sell side, buy side, and here the last run lower. And after that we had a shift higher, breaking a short-term high here and leaving a fair value gap behind with an order block. So when that happened, I put a limit on here. Stop loss below the 5 minute fair value gap, as you can see, and I wanted to drive it higher towards the buy side liquidity. Approximately for let me see, this 170 points. 17 points, and this is let's say 3-point SL, so 1 to 5 or 1 to 6, somewhere in between that. And at first it went in a direction, and it is because the lower time frame way of entering is correct. We are in the discount of the last dealing range, taking out multiple levels of sell side liquidity, coming back in a breaker block, coming back in a fair value gap, and coming back in order block. At that moment here, we had resting sell side liquidity again, a stop hunt, and then a reversal. So at this moment, this is a valid entry pattern, but the question is always, with the pattern that you are engaging in, is also the narrative behind it. And that is what we could see right here. We could see it didn't go for the buy side, but it just went deeper within the range, filling in this volume imbalance, and from there on we went on to take the sell side liquidity. And this is the moment I knew I was wrong on this trade, and that is not a problem at all. Like I said before, I want to grow towards the point that I take the trades that I plan out, because I know more often I'm on the right side than I'm on the wrong side when I just plan my trades out correctly and stick to the plan. So after I take my trades and I journal it and I put it in my review section, I will always point out some comments, things that I could have done better, things that went wrong, things that went right. For here, I would like to say, emotionally wise, it was correct, because I just did what I had to do. I was not impatient, I was not indecisive, I was not fearful, not overconfident. I just thought, alright, this is what I think that will happen. I see my confirmations and I want to get in. The thing what I could have learned on the technical side is what I said just earlier. If you're on the 1 hour and you're not keeping the momentum at the point of, all right, we are gonna get bullish here, or we're not gonna get bullish, you want to see us breaking higher above this buy side liquidity before we are trading lower again. So let's keep it on that for this trade. I don't want to make it an extremely long session, so let's get quickly into the next trade. So over here I had a minus 0.8 loss, and it's been a shitty week for me, looking at the results only, because I have here another loss of minus 2.5%, so minus 3.3 down for the week. But to be honest, you shouldn't be looking at that. Just look at how the way you manage your risk, and just do it over and over and over again, and try to go into high probability trades. Looking back at this trade, it was a process-based trade, but again, it was not a very high ranked trade. It was B on the technical side and B game on an emotional side, and I will dive into deeper why it was B on both. So let's start with the charting section. The main idea behind the narrative of this trade, it was a long trade again. Whilst we were on the weekly, we traded back inside the weekly fair value gap. As mentioned in the weekly outlook, I thought we were gonna be bullish, meaning my first expectation was, alright, if we want to be heavily bullish, we're gonna do it right away. Alright, on Tuesday we saw that wasn't gonna happen because we dove deeper, and that was why I encountered the loss. But it doesn't mean we're not bullish anymore. It just means we can get a little bit deeper for a retracement if other time frames are saying the same thing. And we could see that we still had a discount PD array here. Why is this a discount? Not because we are not measuring it from here to here, but we have to look at the latest range that is being encountered, and that's from here to here, and then we will have 50%. So eyeballing it right now at the moment, to be honest. So we went back into the weekly fair value gap, and that was for me the sign, alright, I think we're gonna go bullish from here. That was the first point. So within this candle that is at the end a very bearish candle when it's printed. First it was of course the candle that is going into this wick. I thought, alright, this is the point. After taking out this major sell side and taking out the low of the previous day and having a small shift in market structure here above this high, I thought, alright, we're gonna get back into the range that went into the weekly fair value gap and made a shift, and from there on we can target this buy side liquidity and get back into the range and ultimately target the buy side liquidity here. As we can see, it didn't happen. But let's first go over my thoughts and my reasoning behind this trade. As I said, we had already taken out the major buy side liquidity on the left side, but we have also taken out the buy side liquidity of the day itself, and also an intraday sell side liquidity has been taken out. So we have a drive of multiple patterns on the lows, and after we came into the weekly fair value gap, we had a market structure shift to the upside, and we have a fair value gap here that I traded in when the PM open started to target again all the buy side liquidity for a 1 to 5 risk reward. And that is when we are looking at it in the correct perspective, and I will take my notes with it to explain this. When looking back to this trade and we're looking at the bigger picture, we are trading for the first time back into this weekly fair value gap, and we are for the first time trading below this low with multiple lows. So when we are reacting from here, we are expecting a big expansion when we want to target these highs. If this is not a stop hunt or an inducement to go higher, to go lower, we are expecting to shift away from here fast. What we can see here is that I indicated as a market structure shift, but for this to be and become a market structure shift, it had to be an expansion higher, a real expansion, before retracing deeper down. What we can see right now is we have a structure high here. We have been trading lower all day from this fair value gap, consolidation here, and from this consolidation we had an expansion lower, taking out this sell side liquidity very smallly here, and a little bit more visible on the second leg that has been going lower beneath this sell side intention, so this sell side liquidity. Meaning the major structure that we are working from is this structure high to this structure low. After taking out this short-term high that I indicated as a market structure shift, we immediately traded back into the range. And when we look within this range that I had as my structure range to buy from, we cannot spot any sell side liquidity. So meaning from this low to this high, we only offered buy side to take out a high in a downtrend at this moment, with a weekly fair value gap that has been tapped for the first time and has still a big range that can be capitalized on. I'm not saying it could not work, but what I'm saying is that the probabilities are not very high because there is not a lot of narrative behind it besides the weekly fair value gap. The only thing that is saying is, alright, we are showing some strength, so this weekly fair value gap is a PD array that is showing some strength, but it is not saying at this moment yet that we are gonna buy right away, looking at the lower time frame structure that is coming along with it. So I thought initially this was my market structure shift with a buy side intention, and here a sell side reversal. But as we can see, there is not a clear section within this low to this high that we want to trade from. So in retrospect, I could have done that better, but again, also on this trade, it is something that I saw, that I draw out, and my main concern with my trading has been always that I'm not following up on the things that I see and that I analyze. So that is something that I'm proud of, and that I'm journaling also as a good notion. The thing that I could be working on regarding to both trades is taking into account the bigger picture and the narrative that is broader than only the PD array that you're seeing and the way that we are approaching certain areas. And it may sound a little bit fake. What I'm meaning with that is if we are trying to expand fast, so we are at a point that we're thinking, all right, if we want to be bullish, we're going to be bullish from here, and we have to be bullish with expansion. Meaning, if you want to be moving with expansion, we don't want to see big retracements. So even though you can see a fair value gap or a balanced price range or a volume imbalance or an order block at a certain level, but it is a deeper retracement, but you are expecting a big expansion fast away to a certain level, that retracement is a sign of a red flag, and it's not a buying opportunity when it's coming back into your balance. And that is something that I have more visibility on right now. So emotionally wise, I was calm before and in the trade, had my charts marked up and believed in the high time frame narrative, planned a trade, and the trade was wrong. Emotional wise, this is what I'm aiming at, trading what I think and plan. If correct, that's nice. If incorrect, I can learn. Technical wise, it was a trade that was based upon the weekly narrative that I had in mind. So alright, buy side liquidity is more favorable than sell side liquidity, so it's good that I stick to that, and I try to frame something that is along with that narrative. It was also in line with a higher time frame PD array that we came back into the weekly fair value gap, and on the lower time frame there was a setup. The pattern was there. It was a liquidity sweep. We had a market structure shift, and we had a PD array in discount, and we had buy side liquidity on the top. The minus part and the things that I have taken out of this trade as lessons is it's the first time dipping into the weekly fair value gap. It could be used more often or at a deeper point before reacting heavily. It broke the short-term high without internal structure, as I told you, and that is indicating a possible stop hunt, and this possibility became larger after trading down right after breaking the market structure shift. So that's a dangerous thing, and that's something that I have to pay more attention to, because I'm getting more chopped up in this type of environment. When this happens, sometimes I get induced to the wrong side then. And also when looking at the 1 hour structure, we haven't broken any big structural points yet, and this is the 1 hour for here. What we can see is we created a low, had a retracement, and this is the new low. That meaning this is the high, this is the low, so this is only retracement. We haven't done anything spectacular. All right, this has been my trading week so far. Hasn't been great, but I took some lessons out of it, and I will be back next week again. Tomorrow, if I have some time over, I will do a review session of the week according to the charts itself. So what has happened and what have we done this week, and of course we'll be back Monday or tomorrow also for a weekly outlook on what I think that will happen for this week. Thanks for watching. If you liked it, subscribe and give a thumbs up, and we will be back again later. Ciao ciao.